product ready to be sold, you're not ready to export it to Africa yet, here's what we recommend you do. And sometimes that conversation goes well, and sometimes it doesn't, you know. But I think in general, this is a hugely important area that has the potential for transformation of agriculture, but there are also some sort of pitfalls and things we need to be careful of, which I'm happy to mention later. Thank you.
Thanks very much, David. And that leads me into the second point around, and this is for any of the panel members. So as you look across the continent, what do you think are some of the risks to this enabling financial inclusion, or the risks to digital means and digital platforms and digital take-ups? What are some of the challenges to that taking place? Anyone? Go for it, Russell.
Well, it depends how controversial you want to be. On the one hand, I would say I think a big problem with financing in general is that money often doesn't get into the hands of the right people. If you look across the continent on the inefficient deployment of capital, to that extent I'm talking about not so much a huge amount of capital comes from public institutions and things like that are supposed to develop agriculture, and instead of it getting down on grassroots level, it doesn't. So I would say there's very little risk, because if the money's not getting to the people anyway, that at least digitally, you've probably got a better chance of putting the right money into the right people's hands. And the risk really of lending is the same as with a commercial bank. The risk is failure. And the only thing that's going to mitigate that is, especially with the newest segment in the market, the way you're going to mitigate that is with good data, smart decisions, and having access at the point where the transaction happens. So if you look at all banks and all commercial institutions, generally speaking, you've got to go onto their online banking app or their profile in order to transact. And I think where the market needs to move to, and where it is moving to, is that at the point of contact where the transaction happens, that is where your financial services need to be, and that is where your user base needs to engage with the potential for finance.
Awesome, awesome. Lucy, that's a great intro. Thanks for that, Russell. Across to you in terms of your experience as AB Bank in Zambia, digitizing those payments in rural areas, you know. How are you doing it there?
Okay, so we have recently embarked on a specific audience in terms of financing the small-scale farmers. So we have picked pilot areas where we are working with farmers. Of course, this has been done through partnerships, because AB Bank is a commercial bank, and of course our main focus is not to, we're not a development institution, so to say. So we have partnered with GIZ and Common Markets for Conservation. This is a social enterprise that is working with farmers in the rural areas to specifically help them in conservative farming and climate-smart farming practices. So through this intervention, as the farmers produce the crop, they sell it to the Comaco, and ordinarily they would pay using cash. But through this partnership, AB Bank has been able to digitize those payments. So as opposed to the cash, which we're trying to cut out completely, they are now paid using a mobile wallet. And all the farmers are able to self-onboard. It is really easy. It's not that complicated like the brick and mortar that has been there for years. We are using the digital platform, and all the farmers, despite not so high literacy rates, it's easy to use. And this is what we're leveraging on. Also from our end, we have further provided the loans at concessional rates. So these loans are provided at a lower rate specifically for people who are adhering to climate-smart farming, and then they're given the lower rates. Everything is done digitally. The loan is disbursed to them using the same platform. We try to use the financial footprint that they left, and this is why we encourage them to make all the farmer payments for the crop that they're selling to this institution using the platform. And once they get that, we're able to see, okay, this farmer was able to sell crop worth this much. And if we have that financial footprint in our system using the data that is available, it helps us also to be able to assess the loan and see where the risk is, and it makes it easier for us to actually disperse these loans. Oh, one more point, these loans are also collateral-free.
Collateral-free?
Yes.
Your queue just doubled in front of you there. And I'm taking moderator rights, and I'll be in the front of the queue there. if you don't need any collateral. Excellent. Lucy, thanks very much. It's nice to see how AB Bank is really putting the bank in the hand of the farmer in the rural area. Wonderful. Chris, coming across to you, the challenges, the difficulties. We're talking about financial inclusion, we're talking about digital channels, different platforms. So what do you think drives the take-up of these digital channels or platforms?
It's a great question, the take-up. Sort of the biggest challenge, or one of the biggest factors of digital is it's all community-based. And we know what the global challenges have been on, some don't realize is that pure identity is your biggest challenge in getting people to be onboarded into a financial inclusion or even a digital platform. And we obviously sitting in this part of the world and looking, across the continent, even globally, we find some of the biggest challenges are basic connectivity. There's no point having these phenomenal platforms if you can't get the guys to get on board. Smartphones is something that's really, and we're all tired of hearing this, but it really is moving in 100% the sort of the right direction. But unless banks, and it's really encouraging to hear what you're doing up in Zambia, unless you almost decreasing the level of identification required for the individual and the farmer to get on board, you're going to hit massive brick walls on the inclusion status in this. And as I said, we look at communities. What we would love to drive on the Sherpa model is that the farmer becomes a beacon in this space, and everybody around him, the community, the staff, the resources, actually benefits from the basis of the digital space. Now, we all know what drives digital. It's social drives digital. For no real benefit or reason apart from the advertisers and the guys and the influencers making incredible amounts of money. It's driven through economic platforms, financial platforms, educational. But it was raised now, there are so many apps, and this is one of my key drivers. We are driving a very solid, incredible platform for what I understand in the agri sector with digital inclusion and financial platforms, and we're not creating an app to go and try and find something out there. That hand-in-glove scenario is very, very, very difficult to find. And that's probably the key driver for us, is that the farmer, if you look at the farmer, and as I said, I'm not close enough to it, but his day-to-day must continue. You can't risk his yields. You can't risk his time. So unless there's real benefit, we call it in marketing the reason to believe, the RTB, and then the reason to buy. If that doesn't exist, you really, really are wasting your time. And I'll give you examples of this in my closing, is that online gaming is a massive, massive digital platform. But nobody actually says, I have a wallet on online gaming. It was a means to an end. If you look at crypto, getting a wallet in that space was a basis to get into the financial market. If you look at people in this room relevant to you, your air miles, that application for you is very important to you, your loyalty programs that are of real benefit. If you don't have that driving this and you're just trying to get the guys onto a financial platform, and you can see it happening globally, and I mean this with the greatest amount of respect, your remit platforms 10 years ago, like M-Pesa and stuff, are incredible. I mean, that's the best world global case study is M-Pesa in Kenya. But remit platforms now, it's not strong enough just to be a money transfer platform globally, and you've seen that out of the UK and into Africa. So my feel is if you're not selling a reason to believe to these farmers and giving them something they can measure, you really are wasting your time.
Excellent, excellent. Thanks, Chris. So this is what I was getting at earlier in terms of financial inclusion. Don't just think of it in the context of access to money or remittance and payment systems. Think of that financial inclusion in those digital platforms almost in a holistic ecosystem sense, in a whole community sense, in a whole person sense. So it can also be about driving costs down. It can also be about improving in the supply chain and buying in real time as you're using in real time. So this financial inclusion is more than just that check. It's so much broader. Russell, I'd like to come to you on this topic of digitech, perhaps a bit more broadly defined. How is digitech being used in different ways, better ways to fund farmers?
I think digitech is the only, well, your traditional farmers are funded in traditional means. And here you're looking at your in South Africa, for example, at least in the livestock space, you've got 25,000 commercial farmers, about 200,000 small-scale farmers, and those farmers fit into the bracket of traditional finance. They'll apply for a loan from the bank, or production facility, whatever the case is. I think much more broadly than that, that movement will change and or is changing towards digital as a way of engaging with the farmer, getting unique data in order to finance them better, and then creating a basket of services, very much to Chris's point of just getting people onto a finance app doesn't work. You have to create something that the farmer's already on, like a livestock app or an inputs app or whatever the case is, and through there and through that trading and all the rest of it, you are actually seeing what is the farmer doing, what are they buying, what is the risk profile. Okay, now we can bank them better, smarter, more efficiently on the commercial side. On the small scale side, through those interactions, etc., you're going to be able to have an unbanked farmer and bank them through the trading and through that the insights. So data will drive everything, and you do have to move into a place, instead of having to go to a place where finance is occurring, you have to go to a place where the trade is happening. That will be the future of finance. That will be the future of financial inclusion and just agricultural finance in the next 20 years.
Awesome. Thanks so much, Russell. David, I'd like to come across to you. You know, as financial inclusion is taking place, as data platforms are deepening and broadening and scaling up and so on, not all actors are honest and ethical. You know, as data is aggregated, as funds digitize and become exposed to risks, as markets can potentially get controlled, possibly, you know, by oligopolistic tech. How about some of your thoughts or lessons around how microcredit can sometimes become captured? All of us here in South Africa are well aware of that word, captured. For those who aren't South African, we went through a state capture exercise. It's just where big crooks grab the whole thing and start sucking the life out of it. David, your thoughts around microcredit either becoming captured or how we stop it from becoming captured?
Yeah, I'm not going to mention any specifics, I think that would be inappropriate. But, I mean, I'm quite old. I remember starting a pilot microcredit scheme, I think almost 30 years ago in Russia. At that time, we thought that was going to transform the world, you know. And we were talking about that alleviating poverty. And if you look at 20, 25 years ago, microcredit was going to be the saviour of the world. And there's no doubt it's been really fantastic in a lot of cases. But unfortunately now what we're seeing is a lot of evidence that some of these schemes have been captured. I think there's no better way of saying it. They've been captured by people who are only interested in making money and are not really interested in the aims of the microcredit scheme. Anybody who works in agriculture, I think, as Lucy quite well said, is that you're not going to make your best money in agriculture compared to other industries. You've got to remember that. My father used to do a lot of speeches, and he always said, he always started off by saying, I will tell you how to make a small fortune in agriculture. First start with a large fortune. And microcredit schemes have forgotten this, I think, in a lot of areas now. And there's unfortunately a lot of evidence now that microcredit schemes, a lot of them, particularly in Asia, are making the poor poorer, are not letting people are borrowing money they can't afford. And there's lessons there that I think we need to apply to the subject of today's conversation. We need to be looking at ways of making sure that that these schemes don't get captured, that profit is not the sole motive. I think it's fine when a bank's doing it because a bank has got regulations, that's no problem. It's fine when organisations like these are doing it, no problem at all. But when the large tech start coming in, that's when I get worried. I don't know what the solution is because it's incredibly difficult to regulate it, but it's just a warning, I think, and if you start looking at microcredit now, there are more and more quite scary articles about how it's in significant areas making the poor poorer. And that can't be right. That's not what we're trying to do,
So I think some of the lessons there possibly is transparency, external, whether you want to call it moderation or arbitration, degrees of community ownership, at a broader scale, so that those who are on the board or on the shareholding are in fact recipients in the financial ecosystem themselves, and so have a fiduciary responsibility, yes, to the platform, but also primarily to the people down below. So now we're open to Q&A. I hope you've all you had your tea and coffee, and you've got some good questions for us. Whilst you're thinking about that, for those who joined perhaps a little bit later after we started, we just asked this question about why. So we're talking about financial inclusion in agriculture through digital means. Why should we be doing it? I said 35% of Africa's GDP is agriculture. It's probably not a single sector that's much bigger than that. Sub-Saharan Africa, we've got 750 million people, and some studies say half to two-thirds of that are involved in the agricultural value chain. So we have to get inclusion, financial inclusion and digital means going. Here's another interesting stat, which I didn't mention at the start, I'll do so now, in terms of the why. Why do we need more financial inclusion through these digital means? Economic growth from agriculture is 11 times more effective at reducing extreme poverty than any other sector. I'll say that again. Economic growth from agriculture, and our panel is around financial inclusion and digital platforms and digital means, economic growth from agriculture is 11 times more effective at reducing poverty than any other sector. So these are the whys that we need to be charging at these things. Open to you in the audience. Any questions or even comments? Please, do we have a roving mic? Here it comes. So if you could just very briefly say your name, organization, and keep it short to allow others their chance. Thank you, ma'am.
Okay, good afternoon. I'm Renee from Business Western Cape. I just have a question in terms of the financing. Are there any models as in terms of non-recourse loans for our farmers, any startups, opportunities that will afford them just to get started? And I know when it comes to technology, some of our people are a little bit challenged in that respect. Would there be training, bringing them on board so that they can fully understand the package that you're delivering or providing? And then once again, how can you assist our farmers small scale? Thank you.
Good question. It's at this point that I won't say I used to work for FNB for 5 years or Nedbank for 15 years, because we want collateral, recourse. But Lucy, perhaps just elaborate a bit further in terms of this question. Non-recourse loans. So you spoke about not asking for collateral.
Okay, yes. So for the agro portfolio that we have under the bank, we have flexible collateral. Then for the pilot that we're working on, this is specific to enhance our financial inclusion as a player in that space. We are not actually requesting for collateral. So in terms of the flexible collateral terms, we also look at livestock, for instance. We understand that it's a risk because the livestock may not be insured, but that is what is available. And if we are waiting to get big-scale commercial farmers, for instance, who already have enough collateral, enough security, then we're not helping people from the start as startups, so to say. Maybe one other aspect I would give as an example, in Zambia, for instance, we have what we call the Farmer Input Support Program, where the government gives a certain amount of, say, fertilizer or some funds to help the small-scale farmers who are really in the low-income brackets. This is to help them with their crop and their basically just crop, actually. Well, look, this is really not sustainable. And it started off a couple of years ago as a stopgap measure, but now it has turned into something that I can call a social grant, because they are not graduating into being able to sustain themselves. So for us, of course, if you give a grant to someone, they will not see the need to actually work hard. And if they're expecting this every year, then they'll sit back and just use the money and the crop. So for AB Bank, or the commercial bank that I'm coming from, we, of course, still have to get collateral, except it's very flexible. And the minimum amount is really, really low. We are really looking at the micro and helping them to grow. Yes.
Thanks, Lucy. Russell?
From our perspective, I can't say too much yet. We're busy in partnership with government about doing an alternative risk scoring model, and then partnering with financiers in order to do in order to do an alternative finance scheme that won't be heavily collateralized. Obviously, the land bank, since it's restructuring, is a blended finance program and things like that. If you look at your traditional commercial banks, obviously unsecured debt is a dirty word. But in terms of just at least us, it's like a digital innovator. We are busy we've aggressively expanded in the next 3 to 5 years. We're busy securing banking partnerships in your traditional space. And then as kind of our government program rolls out further, or at least our R&D, we would then work with government in an unsecured space, and possibly banks will come on board. But we're doing both. But digital is the future, and I think across the board, no one wants to leave the small-scale farmer out.
Yeah, great, thanks. And just one last comment from me. So whoever's ready for your next question, please stick your hand up for your next question, and the roving mic will come to you. So just a quick comment on that. I don't work for OLAM. I'm not doing a great advert for them, but OLAM are one of the largest microcredit providers to small-scale farmers across the continent. And USAID thinks they could, in fact, be the largest non-recourse, non-collateralized form of finance and assistance. OLAM. Yes.
Thank you to the panelists. My name is Sibongile Cele. I'm from African Women in Agriculture. And listening to the speakers regarding apps, we work with farmers, and there's a level of scaling up, because just as much as we do trainings, they get to a point where they are scaling up. So on the micro lending, where does it get to a point where it's no longer micro, it's accessible, and there's no collateral? I'll cite one developmental bank here in South Africa where you are expected to come with 40% owner contribution and 60% they will fund you. And it becomes a barrier for farmers, because you coming in, you want to scale up, but they say bring 40%. And then on the apps that you have, is there a fee that as a farmer do you have to pay to be on your platform? Because I know there's rate cards that are linked to apps. So for you to be onboarded, is there a fee that you charge for farmers? And how much is the fee? Thank you.
Okay, so I think the first part of the question was somewhat similar to the very first question. And as I said, I've mentioned OLAM is one, and you've heard some of the others. Who wants to have a stab at perhaps that latter part of the question in terms of apps and take-up of apps and the revenue models of apps and subscriptions, and how do you get them going?
Yeah, thank you. It's such a open-ended sort of discussion, because you got to get down to sort of what app is relevant to what farmer. As I openly said, that we aren't creating an app to try and get it out to all the farmers. We're creating a digital technology platform to try and manage, or to manage the dispense of certain chemicals to get really beneficial outcomes. So if you took our world from Pure Flow into that space, you would look at the full ecosystem within a small, medium, and even a large commercial farmer within that space. All apps, all technology, they all come with license fees or collab fees or scaffolding fees. I'm not the technical guru on that, but if you're going to create a digital inclusion with financial inclusion, there are many, many, many revenue streams, and we'll talk to the banks about that. We'll talk to the digital guys. We'll talk to the product sales. I mean, there's a platform that we work closely with. We are developing within the crypto or stable coin basis, where there's a 5% rebate back to any purchase made through that platform. And that there starts to fund and finance a lot of your day-to-day license fees, depending on who's in the tech stack, depending on which other software you're actually utilizing. So you would have to really narrow it down to what app are the guys looking at using, and if it's a general open app that the guys are bringing in, yes, there probably will be license fees. If you bespoke creating it for a certain sector, there are many, many revenue streams delivered through the space that we're talking about today that goes far, far beyond, I would say, a slightly narrow-minded or naive approach of trying to make $100 per farmer using it out there. So it probably doesn't nail your question exactly, but we would need a lot more information of where we were taking this, into what sector and into what environment.
Okay. So I'll just add a little bit more. Thanks very much, Chris. In terms of, if you look at what continental players are doing. So I'm talking about the African Union, and then within the African Union, there's a leg that concentrates quite heavily on agriculture called FARA, Forum for Agricultural Research Across Africa. They're working with Afreximbank and others to bring together what you might call the efficiencies and the scale and the opportunities of clustering. You know, many of us have perhaps heard of an automotive supplier park. And so you understand through that automotive supplier park, you're getting industrial clustering. And so you're getting opportunities for information to flow a lot faster. You're getting opportunities for the different players in the supply chain to lean off of each other. So you're not just standing on your own trying to get credit or trying to find a client. And so there's a big drive now with Afreximbank, with FARA under this AU Agenda 2063 to take that industrial clustering concept and push it more into agri-parks. And I'm hugely excited about it because they are openly wanting more of the private sector to be involved. We know the continent has spoken about food security or insecurity for decades. We know we've spoken about import replacement for decades. This is the first time that I've seen personally where from the top they're inviting the private sector in and they're swinging the doors open wider and saying we need the accountants, we need the financiers, we need the developers, we need every other kind of sector to come through the door to help on these tough issues. Finance is not the only one. How about a bit of power and some water as well, please? So they're wanting a lot more private sector to come in and then get this clustering as classically defined in industrial development taking place physically. And I think it's through those processes you'd get opportunities for standby letters of credit and everyone starting to lean more on each other to get those financial solutions and sharing of the apps. Any other questions from the audience? We've got my bouncer is on the side and we've got space for one more question before Chris throws us off. One more. One more? Is that it? All right. So, sorry, is there a question? Okay, there is one more. And then I'll close with just 30 seconds if any of you want to have another closing 10 seconds, possibly. And we'll start with you, David, because we would like to hear more about UK. What's UK interested after the question?
Oh, okay.
Please, go ahead.
Yeah.
Question from the floor?
Hear me?
Yes,
Yeah.
thank you.
Okay. Mine is not a question to the panelists, but I think it's a comment. I just want to add on how we approach the microfinancing of the smaller farmers and the startup finance. So on the microfinance, I think it's an issue of data availability. In our bank, what we have done is actually designing a product which can be used by any player in the agri-value chain, including the SMEs. The MSMEs, the micro and SMEs type of customers. We have designed a product which does not require you even to fill forms or provide collateral of some sort, but it's only the information, data about you. So you can have an access to a loan up to a size of about $250. Of which for a smallholder farmer who is cultivating a half an acre, 1 acre, can afford to get without any formalities which can delay him or her to get a loan. And we have that product and it's working. Excellent. The same can be taken by micro businessmen. They can also use. But we have also designed a startup finance for the smaller farmers up to 5 million Tanzanian shillings. They can also borrow without having many formalities to follow. And we are doing that to actually, of course, gather information about them in such a way that we can escalate or use that study to finance more smallholder farmers in the agri-space.
Great. Wonderful. Thanks very much. So if we can scale those up and get those out, I think Africa's benefit in terms of cell phone penetration, data that can be reverse billing to a big brother somewhere, who knows. So look, my bouncers here at the panel, apologies, I said I'd give you closing comments, but we're out of, we can do closing comments. Okay, so, Improving financial inclusion through digital means. Sub-Saharan Africa, we've got about 25% of the entire planet's arable land. If you take the whole African continent, some say 50% of the entire arable land on the planet is here, but yet we're producing 10% of the world's food output. David, what do you think UK companies want to do when they look across Africa in this space?
Well, I think you put that very well. The potential is huge. We've been saying potential for a long while. I think the time is now. I think that things are coming together so that Africa will be starting to produce food, starting to feed itself. The level of energy and innovation that's here is fantastic. From our side, Britain is sort of, I think, changing now to realise that we're not as important as we thought we were. And we're extremely desirable to work with Africa going forward.
Wonderful. I can vouch for that. UK Prosperity Fund and many others rolling across the continent wanting to help. Thank you, David. Lucy.
Okay, for me, under my closing remarks, I think I want to go back to what the chairman said in his opening remarks, talking about the potential. We've been speaking about it. So now we want to look at the practical solutions that we can use to get this done. So I listed a few points, and I think we need deliberate intervention. So for instance, reduced cost of infrastructure and technology to enhance the actual digital processes for the financial inclusion. And then we need to understand that specific organizations may not have the experience and the strengths in terms of all the aspects of financial inclusion. So we need to leverage on partnerships, work with the technological companies, the development institutions. For the bank, we may not have the funds to give concessional rates, but if a development institution gives us that fund to manage for them, then it works better. It's also very important that the curriculum from the beginning, it's better to instill this into the upcoming generation. My grandmother in the field, in the village, is not going to want to use technology. She doesn't understand it. So maybe we focus on the upcoming generations. And for instance, one more aspect, back in Zambia, there was a proposal to increase, to add a levy to each transaction. And that takes away from the trajectory of enhancing digital financial inclusion. And yet the Bank of Zambia, on the other hand, is talking about go cashless. So we need to have policies that are in tandem and not actually contradicting each other. So hopefully, at least my experiences have helped everyone else here.
Wonderful. Thanks, Lucy. Chris, thank you so much, Lucy.
Thank you very much. It's really critical from a technology point of view. We don't move too quickly. Everyone's talking AI and interpretation and analysis. We're not ready for that at all. There's massive benefit to it as long as we've got the foundations right. The other thing that we've found, especially trying to raise money and build this pure flow platform, is we can all see end game. We can all see where it can go. I really look at the financial institutions and the no's in this industry is to find very, very solid starting points. It's always the toughest thing, is to get going. And then digital inclusion, it's ironic that we're speaking about it at food security, agriculture, the continent, because I honestly believe, and I think a lot of people share this, it's not my thoughts, digital inclusion will become as strong a human right as food, water, and things like power. So it's amazing to actually represent it here today. And it is, I love what you said, it's generational. It will be a human right, otherwise we're going to leave a lot of people behind in this.
Wonderful, leave none behind. Thank you. Russell.
I think a closing idea for all would be, if you look at like the opportunity of agriculture across the continent, AI over the next 10 years will take most of the jobs in the world, but as populations rise, you're going to need to produce food globally for global populations, utilizing less space with which to do so. And Africa is the best opportunity to produce food because of our abundance of space. And within that, if you look at the greatest growth opportunity in the finance and banking sector, banks are not going to move massive market share by moving one retail store from one place to another. Banks are going to move and grow their market share globally by being at the point of transaction wherever digital interactions happen. So if you have those two aligned between digital interaction and capitalizing on the growth of agriculture, that's where interesting, globally scalable businesses are going to emerge.
Excellent. Thanks very much. Please put your hands together for our panel this afternoon.
Thank you. From my side, thank you very much. I think that was very engaging. I think the whole thing about the digital divide is something that is also it really is something that is on our mind, and yet I do believe that technology is a critical part of the actual agricultural setup to improve productivity, to improve market share, to improve all sorts of things. But it takes energy, it takes finance, and that basically is what we need to do. So the digital divide is one part of it, but to actually get it financed, the big divide is against the big and small, and that's what I believe is an issue. We are running a little late now, and I'm going to call on the next panelists, Nigel, Chanakira, Cornelia Ayers, and Tendai Chitapi. Please to all come up on stage. I know we're waiting for them to do the mic change at the back. We certainly appreciate that agriculture is a growth industry. We know it's a growth industry because you put seeds in the ground and they grow. All right, and economists like things like growth industries. I suppose oncology is another growth. No, let me not go there. From there. What we also need, from a point of view of the actual size, the biggest, as I say, problem is size. Funding is available for big, but not universally available for small. There are companies that are doing that. There's DFIs that are trying to get money to the small operator, but to a large extent, the divide is there. The actual institutional structures don't exist to service the small. And that's what we need to be concentrating on. How do we actually get institutionalized structures to get that funding down? And by institutional structures in South Africa, we've got a superb financial services sector, right? If Fashini wanted to raise 5 billion rand to open 40 new stores, they would have no problem in doing so. If Anglo America wanted to raise 60 billion rand to open a new mine, they would have no problem in our South African financial services sector. The rest of Africa's financial services sector is battling because, if you've got a funder in London or a fund manager in London that wanted to place $100 million in most financial markets in Africa cannot absorb $100 million. Just like that, you've got to make special arrangements and look at the projects, etc. Right? But South Africa, we can absorb for $100 million, we can absorb $1 billion without any problems and without any difficulties, right, to do that. But when we actually say, how can we actually get that money, right, 500,000 rand, right, at that level, that is a part of the financial services sector that doesn't exist. And we need to actually look at creating institutionalized structures to generate access to finance at that level, so that it's not somebody doing a favor and it's a special effort that somebody is doing, but actually incorporated into an institutionalized structure. Nigel, how are you doing? Right, welcome. I'm going to welcome this panel on stage. Nigel, enjoy it. I've met Nigel before, and I think he's going to do an absolute great job. Thank you very much.
Thanks, Chris. I hope you can hear me. Fantastic. Good afternoon to you all. Can you all just be upstanding for a minute? You look like you are falling asleep. Come on, folks, come on.
So we should upstand as well.
We got to change this world. Okay, just close your eyes and point north. Point north. Close your eyes. Close your eyes and point north.
Where is north?
Some of you just won't point anywhere. Please point north. Okay, now open your eyes and check where people are pointing. Now, if we said we were going to the North Pole, would we get there at this rate? No ways. We're not all going to get there. Please take your seats. I think we're talking here about the North Star, isn't it? Where is the North Star? How can we get to where we want to get to? How can we get finance into the hands of people who are producing food and agricultural products in Africa? And it's mainly the young. It's the young that need to be fed. It's the women who are producing the bulk of the food in Africa. That's a stat as well that is factual. But how can we leverage technology? Is technology working? And that is the question we have this afternoon. Are lenders taking advantage of emerging technologies? That is the question. And my name is Nigel Chanakira. I am an investment banker and an economist from Zimbabwe. And I've got two very informed practitioners to help me with the conversation. I'll ask Cornelia to introduce herself briefly before we get into the meat of the conversation.
Yes, thank you. So my name is Cornelia Illes. I'm working in Zambia. I'm working for GIZ. GIZ is the development arm of the German Development Corporation. And we work worldwide to improve the livelihoods of the rural population. In Zambia, we are working in a project on agricultural finance. So we are working on the heart of the topic that we've been discussing all day today. So we are working with different banks and microfinance institutions to develop products which are relevant for smallholder farmers. So we basically only focus on the smallholder farmer. And we try to analyze the value chains. We try to see where's the business, where we analyze the business models behind it. And then we try to develop products which are going to be relevant for them and are going to help them improve on their business operations. And on the other side, we provide financial literacy generally on farm and household management, but also on agribusiness management. And of course, that also includes working on digital financial literacy.
Okay, that's quite a mouthful there, Cornelia. Tendai, you are involved also with a lot of farmers. Can you briefly just introduce yourself and the work that you're doing?
Certainly, thank you, Nigel. So my name is Tendai Chitapi. I'm from Zimbabwe myself, but living and based here in South Africa. I am the co-founder and CEO of an agri-tech startup called Kuronga, which is using AI to help farmers validate fresh produce quality at their farm gate and to match and direct and target their produce to the right buyer based on the quality of their produce. This is based on the problem that we sort of have realized with small farmers of a high rate of market rejections because of quality mismatch. And we believe that by leveraging the power of AI, we can help the farmers to sell not only more of what they grow, but also to have a significant impact in reducing food waste. The issue of accessing finance is one that many of the farmers that we're working with, and we've built our sort of beachhead pilot community of farmers, just over 1,000 farmers in the greater Gauteng area. And access to finance just remains a consistently recurring challenge faced by farmers. So we're hoping that this conversation will hopefully give us some direction.
Okay. Let's start with you, Cornelia. To what extent would you say that technology has actually been an enabler for us taking a quantum leap in the last maybe 20 to 30 years? If you look at Africa, is technology really working in terms of giving access to more finance?
I think it would. In those cases, for example, where we are working in small projects, like, for example, a project that even Lucy was referring to before, in projects where we partner between the financial institutions, between those that build capacity, and between those that are actually working with the farmers and have a cooperative system or a system where farmers are linked together. So in those cases, yes, it's working, but on the other hand, from our experience also with this project, there's a lot of capacity building still needed. So for technology to really make a big step forward, from our perspective, there is still a lot of need to really build the infrastructure, especially to the rural population in the rural areas. We've seen quite a few, pilot projects kicking off well. We've seen a lot of apps and pilots really, working well, but it takes a lot of effort to really make them work, and we've not seen the scaling. So I was very interested in the panel before on this idea of how can we scale this, because one of the big challenges, at least from our partners that we are working with, is really trying to see how can the SMEs completely roll out these technologies. I mean, if I look at how much we as a company of GIZ have spent on, digitizing our operations and making sure that the capacity is built within our own institution, that also has to happen within the SME structures, within the structures of the cooperatives, like really reaching out to all those that are involved in the chain. And I think there a lot of investment is still needed, a lot of investment in that capacity development of the stakeholders involved, who need to, in the end, be able to use the technology and feed it with the data. The data is there, and as long as we can use it, it's really going to make a change, and it has made a change in those small cases. But the scaling is still, I think, where we are struggling.
I read into what you're saying, Cornelia. There are probably too many apps out there.
Yes.
And too many pilots taking place. Do you know of some impactful ones in terms of apps, or is just a whole array of trials? Because we're really looking for impact, aren't we?
We are looking for impact. I can only speak for the case of Zambia, which I now know a little bit more. But just the sheer number of wallets, mobile money systems, banking systems, then app systems that you can use for the different, cooperatives or the SME structures, and everyone, comes with their own system and with their own app, and it's very often the interoperability between those, which is really becoming a challenge. The syncing of these different apps. One is maybe to look into your value chain on the production side. The other one is then on the marketing side. But just bringing all that data and all that information together is already a challenge. So if somebody could come to me and tell me, look, there is this one that will help, bring all that data and all that information together, and will then, put it together, the different puzzle pieces, into one big one, I would say I'd really love to see that one, and I'm sure there's a lot of SMEs and also banks who would love to see it. Just being able to transfer money between different financial institutions, between mobile money and so on, that's now finally possible within Zambia. Since 21, we have the national financial switch.
Okay.
But before that, it wasn't possible. So all these challenges within the whole, even financial value chain and the data value chain, I think there we really need to work on systems that are going to be easier to sync with each other.
Tendai, what has been your experience? Too many apps? Could we aggregate these? Does AI offer us an opportunity to integrate and allow these platforms to operate and speak to each other? We're looking for impact here. What would your experiences be?
Absolutely. So I think what we found is that increasingly there is an embracing of the digital revolution, if I can call it, that's happening, right? There's, I think, an understanding that even we are hearing from lenders and financial institutions that we realize that these digital platforms and a move and a transition into digital transacting, into digital acquiring of users and of data is an inevitable outcome of how we leap forward. In our case, with Kuronga, I mean, we're using AI, I think, in a particularly niche way in terms of trying to solve the quality question for the fresh produce value chain. I wouldn't say that there are too many apps. I think apps like businesses will go through their own Darwinian natural selection process. And I think the best and the most relevant will survive. In our case, we believe that we have, I think, hit onto quite a niche problem that is not a mere marketplace, but I think the issue of quality is one which we find, to speak of interoperability, could be a technology that exists within other apps that are solving other aspects of the fresh produce value chain, where quality is a consistent challenge.
Okay. Let's talk about de-risking the sector.
Yeah.
I mean, you work with a lot of farmers. How do you think, or what should technology be doing so that banks, particularly the big players, would be willing to let more capital be deployed into this sector, into agriculture?
Yeah, so the common cry that we hear from, the mainstream lending institutions and banks, we're speaking specifically about lending at the moment, right, is this question that we don't understand the risk, especially with small farmers. So larger commercial farmers generally have built up balance sheets, and banks are very comfortable to lend against those balance sheets. Those same criteria do not, and those same characteristics are not existing, when it comes to small farmers. And rather than take a proactive approach, what we find is banks have said, we don't understand it, we are not going to touch it, As a farmer, you are on your own until you've built up some kind of a track record that the banks can then, sort of leverage to try and help, the flow of some kind of financing. But I think, the barrier to accessing finance for farmers and in agriculture seems to be high. I mean, SMEs across sectors struggle to get access to finance, right? It's not a problem that's unique to agriculture. But I find that the hurdle is much higher in agri. And so, so small farmers are hit with a double whammy, right? And it can be anything from, in my view, I think what you're dealing with is very rigid risk models that are often outdated and that are often irrelevant to the existing status quo that individual small farmers are facing. So I think the banks, I think technology such as Kuronga, such as what we are building, is a way that we can not only acquire users, but acquire data, right? The moment that farmers and buyers match up and they start to transact on our platform, you're starting to build a transaction history. The very information that the banks are saying, we've got no line of sight into the financial performance of small farmers, and so we've got nothing to start with. So I think the more data reliance, someone earlier spoke about, proxy data to help, design and create alternative and newer risk models, which will make it easier for banks to be able to look at small farmers and how they can access credit in a more meaningful way.
Okay. Cornelia, I want to come back to the mere fact that if you look at mobile money, this is a revolution that has transformed Africa, East Africa all the way down and across, in fact, the continent. And one would have imagined that with mobile money, the fact that you can track it, it allows then the data records to be available, offering a farmer, the capacity to then, I mean, if we got the transaction history that they have, they purchase inputs, they can check the weather with their phone, we could obviously do forward pricing, check what the markets are, future pricing. One would have imagined that the quantum leap in terms of giving access of finance to the farmer would be so much easier. Why has that not happened?
Oh God, that's a question I hope we can all answer together in this panel. It seems to be the question of the day, to be honest. So just from our experience that we've had with working with those Komako farmers in the very far rural areas in Zambia, there is still a lot of question marks when it comes to how do I have money on my phone. If you're not used to this, it takes a lot of trust building. So we've had a lot of situations when we did the first payouts, we've had to make sure that the farmers would do a cash out immediately so that they would see, from the phone that there's actually really like a banknote attached to it. I think it's a longer process. It's not something that will just happen quickly. And there needs to be incentives in keeping the money on the phone. There needs to be, savings accounts where you can get some interest rates. There needs to be an ecosystem built around it. You need to be able to really pay in the villages and rural areas. Very often you don't have enough cash in, cash out points. You don't have really the possibility to buy all your things in the rural setting, in the rural area. So it's about building that ecosystem as well. It's not only about doing the payment online, but it's also about building the ecosystem of being able to pay in the rural setting where you are and not having to travel somewhere to do the cash in, cash out, building the trust into the system. There's a lot of fraud cases now ongoing as well, so people are losing trust again into the mobile money systems or in the e-wallet systems. There's a lot of fees attached to it as well, which I find, especially in the Zambian case, is really refraining the farmers from really wanting to go into that system and staying in that system, because they know that if they are going to cash out, there is a fee attached to it. There's a fee for transacting between the different institutions. So that system still is not really enabling farmers, especially in the rural areas, to stay in the digital space. And I agree with you, that's like really building the history, and that's the chance to really access the also loans in future, building up, because it starts with the digital payment system. That's the start of it, because you need to be able to build that history. But without really that enabling environment, people will always go back to the cash, because they will always, see the restrictions around it, see the fees, see all the hurdles with it, rather than seeing the benefit of it. So I think there also in the enabling environment, we still need to think about how we can make this even more attractive, to build up that history, to then being able to access that loan.
Tendai, your perspective on the same? Do you think it's going to take time? We're still in the early days, in your opinion? And perhaps how could we accelerate this process? I would have thought it costs banks less, to have branchless banking by virtue of the cell phone. I would have thought that the infrastructure is in place. We've got voice data already in situ. But, it just seems to be taking an age.
Yeah, I think, again, when we talk about lending, it's all a matter of risk, right? And this question of the complexity of risk, in our case with smallholder farmers, creates a bit of a reluctance to engage. Technologies such as Kuronga, such as other platforms, many of the other platforms that we're looking at, are inherently designed to de-risk by providing reliable data as a backdrop on which credit evaluation decisions can be made. I mean, I've got two interesting examples that I'd like to bring to bear. So in South Africa, in the taxi industry, for the longest time, the taxi industry, here in South Africa, is what we call these informal sort of minivan transports, right? That industry, as a whole industry, struggled to access finance for the longest time. I think in the last sort of 10, 15 years, I'm not exactly sure on the timelines, but I know that Westbank took a very sort of proactive approach in engaging taxi associations and leveraging that aggregation of end users to provide a peer-to-peer accountability system, easier way to track and monitor, and the behavior of the borrowers in a way that made an industry that was potentially locked out from finance able to access mainstream finance. So I think it's a matter of getting creative around how we design the solution space to enable SMEs and small businesses, and I think underserved sectors to play in the space. You and I are from Zim, where we know that the mobile money sort of has become it's become mainstream, right? That is pretty much how people transact in Zim. In Kenya, we've got M-Pesa, which I think has gone a step further, and as if I understand correctly, based on your transacting environment, transacting behavior within your M-Pesa profile, you can actually access some very small loans based on how often you load your credit or something like that. And that, I think, is a way that you see an opening up of taking the mainstream finance, which a lot of people are locked out of, and opening it up to them using the digital interface as a connecting bridge. And so, yeah, I think the more we take a creative approach to how we can accumulate not just the users, but also their data. In the last panel, a point was made around a data-driven approach to lending. I think that becomes really key to how we can open that up in a more meaningful way.
Yeah, I would like to draw the audience in and keep you awake within the context of your thoughts around what we could do to make that quantum leap. I think Africa is on the brink of that opportunity. Are we going to let the mobile players come into the game and be more active? Perhaps. That is a thought. They've been very assertive on the insurance side. We've seen a lot of insurance products evolve within Southern Africa. But the credit side just remains somewhat shy. And perhaps it's the linkage to markets. So I'm just wondering, any bright sparks within our audience? A roving mic of ideas of what we could do and what we can do for us to be able to make a quantum leap in terms of credit. Thank you. We've got a hand there. Is there anybody else who would like to contribute? We're looking for ideas. Yes, sir, at the back, and ma'am here. Thank you. If you can just stand up so that you are marked. So briefly, just introduce yourself and then give us your idea, and then we'll allow ideas to evolve.
Thank you. It's Spongile from African Women in Agriculture again. My suggestion would be, we are here in an investment in Indaba. There should be commitments. We should link projects to funders, because the challenge has been, there's been a lot of middlemen and also other issues of corruption which we can't shy away from. And we find ourselves having projects that cannot be funded because projects are not linked to funders. So I think it would be proper that as we gather, we get commitments to say, I'm coming as a funder, I'm looking for these type of projects, and I'm committing to funding those projects so that we grow our economy as an African continent. Thank you.
Okay, we've seen a lot of side marketing, for example, in Zim, where we had land reform quite successfully, but then the middlemen get in the way, as you say, and they take huge margins. So that's a very valid point. Yes, sir, at the back, Doc.
Okay, thank you very much. My name is Maxwell Mtema, also from Zimbabwe, and I'm with the Trade and Development Bank of Eastern Southern Africa. Ladies and gentlemen, what we need in Africa is organized agriculture. We have heard of many states that most of the land on which to expand agriculture is in Africa. We have talked about food security. We have talked about import substitution. We are going to be talking about that for the next century, as long as we do not have what is called organized agriculture. South Africa, Zimbabwe, and Namibia have proved this a good mix of the so-called smallholders and informal farmers, as well as a core of well-organized machinery of farmers who have access to land with security of tenure. There are lots of structural inefficiencies in the setup of land in Africa in terms of land fragmentation, and as long as we don't get those structural deficiencies in order, we are going to be talking about agriculture in Africa with nothing happening forever. We need some certain percentage of core land in every African country, which is well structured in terms of its land tenure, in terms of specificity of what that land is for, without shooting in the dark and trying to reinvent the wheel. If we get our agriculture organized in that way, starting with the land tenure, then one day we'll have something to talk about. Thank you very much.
Okay, thank you. Land tenure is the aspect of technology that we need to bring into play in terms of getting those farmers organized. Can we have the mic up front, please, to our last contributor? Roving mic, please. Thank you.
Good afternoon. My name is Onika Nkwe. I'm a small-scale farmer, and I want to make a painful remark that many panelists have spoken about small farmers, small-scale farmers, but I never heard the voice of a small-scale farmer. You never put them there to speak for themselves. You spoke for them, you thought for them, and at the end of this session, you'll be making decisions for them. And that is a painful experience if that is going to happen at the end of this Indaba.
Okay, so inclusive, may you try and speak for them, ma'am, very briefly. You having identified, maybe you are one, very, very briefly. What's in the mind of the small farmer insofar as technology and access to finance? I'm asking you directly.
As a small-scale farmer, the struggle is too much. We do everything out of pocket. We don't have these technologies that you are talking about. These digital issues that you are raising here, they are not accessible for us. We do everything as hard labor. Everything from plowing, it's a hard labor. Now with the fuel having gone up during planting season, it became a hassle for us small-scale farmers. And it's just so painful that things get heavier when things had to operate. When things had to be done, prices go up. And for small-scale farmers, it becomes hard. It's as if we are told, you go at the back. Only commercial for farmers go up front. They are the ones who has to do the farming. And it's like our hands become tied. All right, I talk about that, and then I talk...
Okay, unfortunately, time is not on our side. And I promise you, I would like to have a conversation with you after so that we get to know how we can pick the intelligence. Because we discussed it prior to this. The poor farmer is not stupid.
Yes.
That is a fact. But we need to find a mechanism, maybe technologically, to get them to be able to articulate themselves.
But my last remark, please trust us. Trust us, we are producers. At least we contribute to something. Mm-hmm. Please, thank you.
Thank you. I almost said amen, amen. I trust you. We are well fed because of the small farmer. And on that note, let me thank my panelists, Tendai and Cornelia, and the audience for staying awake during this session. I'm grateful. Thank you. Thank you very much. Let's applaud them.
Okay.
And I think that was what we said, job well done. Thank you very much. I think that was interesting. Thank you very much for those three contributions. I think they were very pertinent, on point. Thank you very much. I'm the time Nazi. Unfortunately, I have to move on. We've got quite a bit of slippage and that sort of thing. We've just got to wait for the changeover of the mics at the back. And I think it was an interesting thing when you say, how do we actually get financial services to our small-scale farmers and remote areas where we've got underservicing, whether it's from an electricity grid network point of view, from even a financial services outlet access contact point of view, not very easy. And it sort of reminds me, you know, what was interesting during COVID, what really, really exploded was the, firstly, digital economy. In other words, to be able to buy things online, all right, and which companies actually thrived. And it gave me a thought as to when it came to deliveries. Do you remember I don't want to say good old days because that's fraught with difficulties these days, but do you remember when milk was delivered to our doorstep? Right, and then the dairies decided it was too expensive to do so. But who were the delivery kings? Were our newspaper, the newspaper industry, the print industry. They could get a newspaper to you almost any corner of South Africa, and I'll speak about South Africa, in terms of delivery. But again, it's what business were they in? Because technology has basically decimated the newspaper industry. We get our news in other ways, all right? And yet they had a distribution network that was second to none, right? And if you think about it, as you say, then what business are you actually in? And the newspapers cut their distribution channels because of the cost. All right, they battled with that, all right, because of the cost and the declining circulation and all of that. And that was interesting to me because the one thing that really exploded was the delivery business. But the newspapers never saw themselves as being in the delivery business. They saw themselves as being in the newspaper business, and delivery was a cost. Can you imagine where they would be if they actually understood that Take-A-Lot was actually the business model of the future, and then actually in the delivery business and not necessarily the newspaper business? All right, how their network and infrastructure could have put them ahead, but they didn't. And I think this is, in the new digital age, I think there was somebody who says artificial intelligence is going to kill all the jobs and all the rest of it, but I think it also means that what business are you in? Are you in the supermarket business or financial services? I mean, they turn over a hell of a lot of cash, and you can now draw money at it, you know, to till a lot of things. And there's a lot in agriculture. It's the same thing. If going into big pack houses and cold chain for things, what about the delivery business, for instance, in doing that? So it's just a thought, is what kind of businesses could actually be servicing agriculture that we're not even thinking about at the moment because we don't see it as those businesses. I would like to invite the next group on stage. I really do appreciate it's Susan Payne, Nashipai Letipan, and Fuzlin Levi Hassan. Please come up, and I welcome you, and I hope you have a very good session. Thank you.
Thank you so much. Good afternoon, everyone. My name is Nashipai Letepan. I am the Convening and Communications Manager for the MasterCard Foundation Fund for Resilience and Prosperity. And it is my pleasure to be moderating this session. I'll give my fellow panelists a few minutes to introduce themselves. So we'll start with you, Susan.
Hello, can you hear me? This is the acoustics are not great in here, so I'll try and speak as clearly as I can. My name is Susan Payne. I have spent about 30 years working in emerging markets for Goldman Sachs, JP Morgan, and various hedge funds. But I am here now because I have focused exclusively on food security and climate change in Africa over the last 14 years.
Thank you, Susan. Yasmin?
Okay. Hello, my name is Fazlin Levy Hassan. I have 25 years experience as a venture capitalist and in development finance. Today, I'm speaking to you in my role as Chief Investment Officer of Glide Capital Partners. Thanks.
Thank you. So before I kick off, I think we all know that agriculture remains one of the largest sectors that brings employment to young people, and especially women in rural areas all over Africa. So the MasterCard Foundation Fund for Resilience and Prosperity is a 7-year, 126 million fund that aims to support SMEs in 3 sectors. So the first being agriculture, the second being climate adaptation, and the third being digital economy. And one of the objectives of the fund is for us to provide financial support to SMEs within the agricultural sector with a focus of supporting employment for young women and men, and especially women. So I'm very happy to have you both on this panel for us to delve into this quite important topic. So to kick us off, Susan, why don't you tell us why we should care about gender lens investing?
Well, statistically, the higher the representation of women in businesses, the higher the likelihood of outperformance. This is through analysis by a whole series of different consulting firms, but what has been found is that when there is a good, solid representation of females at a high level, C-suite level, and board level, there is a 25% chance of outperformance in profitability, a 35% chance in outperformance in terms of penetrating or in terms of outperforming competitors, and a 70% chance of outperforming in new markets. So what Harvard Business Review has said is that women are basically the powerhouses in the world economy, and they wrote that in 2009. We haven't seen much change, except, for example, at board level where certain states and countries have decided to embrace board representation as a legislative necessity in 8 countries in Europe, for example. But what we know for a fact is that women make 70 to 80% of consumer decisions. And when that percentage is made, then you have to have representation of that sector and your company.
Thank you, Susan, for that. Yasmin, do you want to add to that point?
Not actually, because Susan has given the stats, and I'm going to actually carry on as to the challenges, and the previous one of the audience, the ladies spoke about it, is yes, we have all of these conferences, and I heard this morning somebody was saying, but they are doing lots for women, but we're seeing so many incubators for women, so many technical assistance for women, but on the funding side, that's still a problem. Thank you.
That's true, and I think that leads us into our second question of the day. So, as you rightfully mentioned, funding is problematic for women, especially women-led businesses within the ag sector. So, can you tell us some of the main challenges that are faced by women in mobilizing finances for their agribusinesses?
I'm going to start off with saying that this is a challenge faced by all SMEs. You apply for funding, and one of the first questions they ask you, so what is your own capital contribution? We need 25% or matching funding. The second question they ask you is, what is your track record in having established similar businesses? That already puts you on a back foot, because as women, we generally are very risk averse. So if we decide to enter into a venture, we use our own capital and the sweat capital to basically plow it so that when we go to anybody for funding, as much as we can, we try to de-risk the project. The second thing is most women folk, and Susan gave the statistics, we've been workers, we've been providers, and now we want to go there and be entrepreneurs, and we need that backing. So then we don't have that track record in having established companies. And I think that's one of the major stumbling blocks that we currently face.
Okay. Thanks for that, Susan. Do you want to add to that?
Oh.
Okay. So what are some of the most innovative sources of finance for women? Susan, maybe you can respond to that.
Okay, so I think we haven't even got the basics right here. I don't think that we are properly funding SMEs. And I don't think that we can talk about, we have to get the basics right here. And we are very reliant and grateful that there are foundations like MasterCard and like Ford Foundation and like Graca Michel Foundation and others that are prepared to thoroughly endorse women in business. Because without those foundations, we would be floundering. And the reason we'd be floundering is exactly what Fuzlin just said, which is that women often don't have the collateral or the business behind them to start a new venture. So in terms of innovations, I think we have to understand better what banks need in order to give small loans, because there are hurdles there, and the hurdles are very realistic. Equity, I think, is quite tricky when you've got a new venture, because very few others are prepared to back you except for friends and family, which leaves us with the innovations, and the innovations, frankly, are the foundations, and any kind of way that they can support funds like Glide and others that are prepared to set up, put their shingle up, and say, we want to support women across the continent, and we will launch a fund in order to penetrate the areas that banks and others can never reach. They will never reach those people. I'm one of those people. I'm a business builder here. I never get reached. The only people that are going to reach me are me selling my house to fund my own business, which is what I did, or a fund that is female-focused, that is prepared to bank on me building my business. So the innovations that really matter are funds and foundations that can find instruments to help women like me, and also others, many others, but I'm talking about SMEs. Microfinance is a different animal, but also needs support.
Thanks, Susan. And as I mentioned, so the MasterCard Foundation Fund for Resilience and Prosperity is actually looking to address some of those challenges that SMEs face. So by launching a challenge fund and planning to provide direct financial support to SMEs, as Susan has mentioned, we will be able to support some of these challenges that the SMEs face. Fuzlin, maybe you can tell us, do you think the industry is doing enough to empower women-led agribusinesses?
I think they are. You've got to give kudos to them, because in the last couple of years we've seen increased sources of funding, maybe not in the avenues that we are looking for in funding the funds to fund the SMEs, but there is an advancement towards it, and that's why funds like Glide and similar is imperative to kickstart this, because we need to show that funders are looking for returns. And we just need to show them that we can give them that returns. So we're currently fundraising now, and you have discussions, and you mentioned gender lens. You can see that there's not the excitement as to gender lens and the requisite actually understanding of why gender lens is important, because bottom line, they all want, yes, the returns, and we will give them the returns as a gender lens fund, but we just need to get that track record like the SMEs that we will be supporting as well.
Okay, that's good. So the industry is providing opportunities for, okay. Susan?
Any investor just wants a return point blank. That is the key driver. It doesn't matter, actually, in my opinion, whether it's an impact fund, a climate change initiative, it doesn't really matter. What drives everybody is it going to be profitable? And then next is it going to have impact? Is it a climate initiative? And I know that climate change funds could argue this. In fact, GLIDE is actually a climate initiative. But I think that that return is so embedded, the critical quality of that return is so embedded in investors' mindset, particularly now, in the recessionary environment that we inhabit. It is absolutely vital that we can produce, any of us, including my own businesses, we can produce returns that are substantial. And if you can produce those returns, then I do think that there is a whole universe out there, but we have to get to the starting gates, and certainly women need to get to those gates, and we aren't getting fast enough through those gates right now.
Thanks, Suzanne. I think it's important for us to delve into a fact that even as these women-led agribusinesses receive the funding support that they're seeking for, they also in turn need to provide support to other beneficiaries within the value chain and across the value chain. And those should also be young women and women, including women. Fuzleen, can you please tell us what GLIDE is doing specifically to ensure female empowerment within the agribusiness value chain?
Thank you. So GLIDE is a gender lens climate and sustainability fund that will do investments in Africa. Our focus in terms of the gender lens is more on female-owned, female-led, and the impact of women in society in general. We currently fundraising, so for the funders out there, the foundations out there, MasterCard, these gender lens funds are in desperate needs of funding, but also funding that needs to happen as soon as possible. If I look at the stats 2 years ago, 3% of female-owned businesses are getting funding in Africa. So as much as it's increasing, it's not increasing fast enough. So just a little bit about GLIDE. I think one of the most important things is what investors look for is, yes, you've made investments, what is the impact? But to that SME, what is absolutely critical is we want to see them succeed. And post-investment is absolutely critical. And so therefore, in our team, for example, one of our executives' pure focus is to assist those entrepreneurs with route to market, their commercialization strategies. And one of the most important things that I see every day in my 25 years of experience is that SMEs or an entrepreneur, they're smart, right? They've developed a technology that can produce or will ultimately generate a certain amount of profit. But not all of them know about financing, etc. So I've seen successful businesses flounder because they're not looking at the cash flow projections, challenges that might have. And that's what GLIDE is actually offering our entrepreneurs, is that comprehensive post-investment support, because if the entrepreneurs succeed, we will succeed. We as a gender lens fund will make that returns and be successful. Thank you.
Thank you. Thank you so much for that. And it's interesting to hear that GLIDE is really putting women at the center. Suzanne?
Okay, so I like human stories. I really like to understand people's own stories. And I'll just give you a little snippet of my story and why women, I think, are, and actually it's not even just women, people in Africa are so disadvantaged when it comes to securing funding. But a recent example in my case was I'm the co-owner and co-operator of 2 large commercial farms, and I also have a plant protein business that is successful. We've won a series of awards. To go back to the farms, I've got a long history in business and finance, and what I was unaware of is that in taking on a farm that needed to be revived, a dormant farm that needed to be revived, I misunderstood that in order to secure bank funding, you need to have 3 years of audited accounts that are profitable. Okay, so that is almost impossible. In fact, that is impossible for anyone taking on 2,500, 3,000 hectares of farmland, trying to make a profit and reviving that farm. So you're spending money on CapEx, you're building up the infrastructure, you're reviving this dormant opportunity, but you can't borrow any money to do that. That strikes me as being illogical on a continent that requires increased food production and could do that at a very low cost. If you look at this from 50,000 feet, you realize how ludicrous that statement is about having to, not even using title deeds worth $6 million could secure us a $250,000 loan for CapEx. Do you know how crazy that is? For me, that is insane. So I am very sensitive, and I completely appreciate the women who just spoke from the smallholders' perspective, but everybody has a story, and the theme is that funding, however it comes, does not come easily on this continent. And yet it is vastly, critically important that we do something to change the dynamic, but it doesn't change. So somehow in this room, somehow in the next 3 days, we have to knock our heads together and figure out how to increase the flow of funds to people not just like me, but the hundreds. I would guarantee that half of this room would put their hands up if I said, are you looking for funding right now? And that is funding that is even from literally $15,000 to $20,000 to $2 million. You will struggle. Because if I struggled with a $6 million title deed to borrow $250,000, then there is a problem, in my opinion. Enough said.
Thanks, Susan. And that actually leads us to, I think, the final question for this panel and discussion. So we know that funding is very difficult, and going the traditional route of looking for funding is the most difficult. So can you please both share with us what incentives would be best to increase funding for women-led agribusinesses? I'll start with you.
Okay. I think the blended funding model is absolutely critical. And when I mean blended funding model, in textbook terms, it means the combination of grant funding, debt funding, and equity funding. Yeah. And then I want to add to that, and it's what I mentioned or answered in my previous, is that, and as Glide, and I'm sorry if I'm just going to digress a bit, I approached one of my colleagues of one of the major DFIs in South Africa, and I said, we're starting this Glide fund, and this is our mandate. And within 5 minutes of having that conversation with him, when I said, we will look at the challenges of not having the security, not having the track record, he said to me, Fazlin, I've got 17 deals for you, and it all needs to be capitalized by the end of December. That's the great demand for the type of investments that we're looking for, the blended, but having the likes like the foundations, etc., coming on to give us that ability as Glide and similar funds to provide those funding to provide funding that the other institutions require. You know, thank you.
Thank you so much, Fazlin.
I think we have to really open our eyes with those with the purse strings, African Development Bank, World Bank, the parastatals, the development banks and others have to really look hard at how they are allocating and distributing funds, and if it's best to go directly through banks, if it's best to go through funds like ours, like various female-focused funds is what I'm saying. Female-focused funds is one avenue. The other avenue is directly. The other, obviously the foundations. There are all sorts of different ways to allocate funds. This is when we talk about female-focused funds and female funding. That uplifts everybody. What that means is just women don't get left behind. What that doesn't mean is we're excluding men. What it means is that there's equitable access to capital. That's what it means. So it means that the boat goes up and everybody's in it. And you don't have women still in the water treading. That's what it means. So we really have to focus on getting funds distributed effectively, fairly, and more quickly than is happening now. Thanks.
Thank you. Thank you. I definitely agree. Proper financing needs to be channeled to women-led agripreneurs for them to be able to grow within the sector and for us to also be able to thrive. I think we'll open up the floor to any questions or comments from the audience. We'll take maybe three questions. One. Okay.
There's one there.
Hi, thank you for your presentation. My name is Wanjiru, originally from Kenya, Nairobi, but I've lived here for 30 years. So I've spent the better part of 2023 trying to research the avocado oil processing business. And of course, Kenya is ahead of its game in this continent, so I've spent some time seeing what's going on up there. And I made some assumptions and came back home. I'm resident in Cape Town now. And I spent about 3 weeks in the avocado plantations of South Africa just 3 weeks ago. And of course, all the assumptions that I had about this industry were a bit challenged, but there is still an opportunity. So I am averagely maybe just a little bit more educated than the average South African woman. I have got more degrees under my belt, but but I have been listening to what it takes to write a business plan, to acquire the capital that I need to go and either secure an existing factory or to build one as a startup. And it's daunting. And as I said, I have gone to school for a few years. I can imagine what does that mean for every average South African person, rural person or small business, to access even that business plan, to access the funding in the first place. So the money is all over there. But when I start hearing equity and capex and I don't know, blended finance and this and, what are the funds to help these women get there?
Yeah, I think 2X has good advice. The 2X Challenge, 2X Ignite has a website, and it gives templates, and the templates are very useful for business plans and others. It's a playbook, actually, and you can access that playbook. So I would suggest you look at some of the offerings that 2X has on its sites, and also Business in a Box. But you're right. I mean, the point is that it's very hard for people to access some of this material and to get templates and understand how best to do it.
If I can just add on to that, even locally, we have some of our DFIs that have got templates on business plans. But yes, they ask you very specific questions. I don't know if you've gone through it. Then you're stuck on the first one. You don't know how to get to the second one. My advice is try and do an executive summary. There's basically 5 things that funders look at, like what is your business about? Then it's the management, and then touch on your technical aspects, commercialization, and financial. I've seen in my years that some of the best technologies that have been the most successful had no business plan. It was somebody written who did not have schooling, and who came to me with an idea which he tried to write down at the back of a cigarette box, and those years it was the big ones, and we funded them. I do believe, and that is sad, is that financial institutions, I understand because I've come from them, is that they want simplified business plans, so it makes it easier to assess, but you cannot have one shoe that fits everyone. So yeah, try and have a look at it, but I would say that if your business plan is good, you could go to that funding institution, and they actually do even have funding to assist entrepreneurs in paying or for assistance for you to develop a business plan in South Africa. Thank you.
Thank you so much. I think I'll bring this panel to a close, but we can take the conversation forward offline, and it was very nice to have you both.
Thank you.
Thank you.
Thanks, everyone.
Thanks. We'll go this way.
Thank you very much. I think, from my point of view, time is our enemy sometimes, because we could spend half a day just on this topic in its own right, but we have to carry on. The next event or next presentation is going to be led by Garen Rapson. We're just again going to do the changeover. Again, we're getting the similar themes, and in a sense I've got the same experience, and this is in financial services. It doesn't matter even if you've got a 3-year track record, it's still not easy. And when you're talking about a 3-year track record in finance, they mean a 3-year profitable track record. I think in the cyclical phase of finance, it's actually very difficult, because agriculture is very cyclical, and even established commercial farms can sometimes battle to show 3 consecutive years of profitability, because that's what's needed. So one really needs to break that mold. And again, we probably have that divide, large versus small, as the first fundamental divide in terms of how we are doing it. Garen, I think your team is almost ready. I don't know if you want to come up already and start. We've almost got a quorum of speakers, so I'm going to hand over to you, Garen. Thank you very much indeed.
Hope it's working. While my panelists come up, I'll introduce the topic. Today we're going to be talking about the constraints and opportunities in terms of ESG in the agri sector. Globally, it's well known that the food system has been one of the major drivers of climate change. It has caused significant biodiversity loss and has been involved with the depletion of natural water resources. These impacts are only set to increase as the global populations increase. And the agri sector is starting to feel the effects of these impacts. We're seeing climatic changes which are pummeling farms across the world. And to put it simply, if the rivers run dry, there's no arable land, and climatic forces stop you from farming, you have no business. Coupled with that, on a social side, we know in Africa that the farming industry has struggled with some social issues, particularly from transitioning from historic unequal practices. We know that racism, discrimination, and other social ills are rampant sometimes in the agri-industry. With these sort of issues, constraints are starting to occur. Consumer preferences are changing. Consumers are wanting to obtain products that are ethically produced and ethically sourced. We're seeing new regulations around the world that are requiring the agri sector to be cleaner and meaner and greener. And we're seeing a shift from voluntary to mandatory disclosure happening. So there are a lot of constraints and there are a lot of pressures, but we're also seeing major positivities coming out from an ESG perspective in the sector, with huge advancements in technology, regenerative ecosystems, new farming methods, and the farming industry pivoting to nature-positive solutions. So with my panelists today, my esteemed panelists, we're going to start unpacking some of these risks and opportunities in the ESG space. Today I'm joined by Grace Mberia. She is the Program Director from the MasterCard Foundation Fund for Resilience and Prosperity, coming from Kenya today. Then I've got Louis van Ravenstein. He's the Group Head of Agri Business at Standard Bank, and Charles Buchanan, who's the Senior Manager for Strategy and Transaction Sustainability at EY. Panelists, if I could give you each a minute to introduce yourselves, I'd appreciate it. Grace?
Good afternoon, and thank you, Gary, for the introduction. So, as Gary said, my name is Grace Mberia. So, the MasterCard Foundation Fund for Resilience and Prosperity is a 7-year fund, US $126 million. And it aims to support SMEs across 3 sectors in 20 countries in sub-Saharan Africa, that's spanning Eastern, Central, Western, and Southern Africa. And the main objective is to unlock enterprise growth and catalyze SMEs to scale up and in turn sustain and create dignified and fulfilling jobs for young men and women, including those living with disabilities and refugees. So we plan to launch the first competition, which will be agriculture, in February, and we'll be integrating climate adaptation and mitigation strategies into that competition. Thank you.
Thanks, Grace. Louis?
Thanks, Karen. Yeah, good afternoon, everybody, for the graveyard shift. Standard Bank, many of you know Standard Bank. We're the largest bank by assets on the continent. We are in 20 African countries. We mainly focus on sub-Saharan Africa. From an agriculture perspective, agriculture is a focus sector for us. Standard Bank started 161 years ago, and we started in the Eastern Cape in the wool industry. From there, we moved to KZN in the sugar industry. So that's where Standard Bank's got its roots, very deep in agriculture. Myself has been with the bank for 30 years, lived and stayed in South Africa, Zambia, Botswana, and traveled across the continent to all our jurisdictions, to farming blocks, to the farmers on the ground. And it was great today to speak to a few real farmers here. That's not like many of us sitting in corporate offices with aircons, but really providing food. So yeah, it's a privilege to be here and look forward to the discussion. Thanks, Karen.
Thanks. That's an amazing wicket there, Louis. And Charles?
I'm Charles Buchanan. Can you hear me? Yeah. It's on.
Maybe while Charles gets sorted out, for today's discussion, I'm the head of ESG at Weber Wenzel, so I know how broad this topic can be. We're only going to cover a few of the topics today. ESG standing for environmental, social governance. So the broad themes for today is that we're going to deal with climate risks facing the sector, starting with adapting to the risks of climate change, then moving over to mitigation risks. Then in terms of the S space, we're going to look at supply chains and how ESG is affecting supply chains. We're also going to look at some constraints between producing food and environmental resources before we close off with some reporting and disclosure discussion. Charles, are you sorted? Let me get a handhold.
Have a mic.
Hi, there we go. I'm Charles Buchanan. I'm in the strategy and transactions team at Ernst & Young, and I focus on sustainable finance. My team works in everything from private equity through to commercial bank funding, and we help to develop sustainability frameworks that businesses, projects, and financiers, funds, investors can leverage off to help to build resilience from an ESG perspective into the various projects they're working on. Garen asked me to give a little bit of an intro just to provide some oversight on what climate change risk looks like. And so in the last 6 months, we've executed 8 ENS, environmental and social due diligences, involving, including climate risk assessments in East and West Africa. And I've got to put my glasses on now because it's a bit scary. So what I'm looking at is graphs and pie charts that all start nice and green and blue in terms of temperature, rainfall, predictability, wind, and then within 20, 30 years, everything goes horribly red and orange. Now, what that basically means is that according to the climate risk assessments that we're working with, for example, in Uganda, if we don't address climate change globally, so this isn't an African problem alone, but this is global, Uganda's in for an increase of 2 degrees by the end of 2040, and then by the end of the century, 6 to 7 degrees. That's the increase in average temperature. With an increase in 75% in the risk of water, so flood-related risk events, and the numbers paint quite a scary picture. Sorry, I've got to find the right space here. I'm not very good at memorizing numbers, so I always need a cheat sheet. We did this assessment across Rwanda, Uganda, Kenya, Tanzania, Nigeria, Cote d'Ivoire, Ghana, and so the average rainfall, the average annual rainfall doesn't change dramatically according to the forecast, but what does change is the volatility of rainfall, the number of droughts, the length of droughts, and then the occurrence of flooding. And I think we see that firsthand, and this is not new. I had a family farm on the banks of the Umfolozi River. I'm sure many of you will remember Cyclone Demoina and Boa. They came back to back within a week, and that was the end of our sugar farm. So these things, they didn't start now. We're starting to see the effects of them becoming more dramatic. And I think that hopefully that just scares the hell out of everyone, because it scares me. I think we've got a lot of work to do to make sure that the funding that we deploy is channeled ethically to the right causes, just in terms of the scope and size of funding that's required. So African countries have agreed to commit to NDCs, nationally determined contributions, and those NDCs are created to mitigate climate change and address climate change risk. We need $2.8 trillion by 2030 just to meet the NDCs in Africa. And so we're going to have to become extremely resourceful in terms of the way that we find that capital and the way we convince investors and lenders to deploy that capital. ESG and sustainability-linked frameworks are critical. What they help to do is they help to mitigate risk at all levels. And the more you're able to convince investors that you're lowering risk, the easier it is to obtain finance.
Thanks, Charles. Yeah, I mean, a lot of funding needs to go into both mitigation and adaptation. Grace, I don't know if you can give us a sense, bearing in mind these risks, how does the MasterCard Foundation assist SMMEs to adapt to the impacts of climate change?
So the risks that have been mentioned are actually some of the risks that we would want to support SMEs in mitigating, and that's because for them to be able to access financing, equity debt in the long run, they need to demonstrate to financiers who are interested in disclosing to their ultimate beneficiaries that they're actually embracing ESG and embedding it into their operations. So what the fund is going to do is, first of all, even as we select the SMEs that we are funding, we would be wanting to understand from them how far have you gotten in terms of embedding ESG in your operations. It wouldn't be an item that would exclude them from funding, but we would be able to assess how to support them from a technical assistance perspective. So some sort of supply-led technical assistance and capacity building to help them embed ESG into their processes and operations, and then that trickles down to their beneficiaries who are smallholder farmers. And another thing that we'll be looking at is SMEs that are actually providing climate-smart agriculture solutions to smallholder farmers. A lot of these SMEs are struggling to access funding. I think it's been discussed in various panels even earlier today. And if we were to support them with grant funding, which is more patient type of capital, then we would allow them to test their business models. So for instance, SMEs that are providing early warning systems on extreme weather conditions to smallholder farmers through SMS blasts in their local languages, which would help them actually understand, or even supporting in supply of climate resistance crops. And climate-smart irrigation, like drip irrigation, for instance. So if we support those SMEs from the onset when they are testing their business models and when they want to scale and grow, then they would actually have a higher impact on smallholder farmers. So that's one of the things that we are looking at. And then down the line, even as they mature, then helping them connect with financiers and investors who then can support them to grow even further through debt and equity investment and help them be more sustainable. And all this would ultimately also create jobs. So it would have a really positive impact on the African economies that we'll be supporting.
Thanks. I mean, Louis, if we can go to like more of a commercial banking setting, how does Standard Bank take into account climate risk in investment decision making? And in actually providing funding, how do you try and ensure the sustainability of the sector in sort of your financing arrangements?
I think up to date, we've always looked at climate risk falling under production risk, and that's how we assess this. But given, like it was said, the frequency of these weather events, the impact that it's having, I think all banks are being asked to consider looking at it separately. ESG, including the environmental impact and the climate impact, both from a physical risk perspective, but also from an environmental impact perspective. So there's two angles to it. I think firstly, we all need to make sure it's in our strategies and in our risk appetite and in our policies. I think that's where it starts. Before, it wasn't so visible. I think over the last 3, 4, 5, 10 years, it's becoming more and more important, and we're starting to build it in the way we do business. In your policies, you need to clearly set what you want to do, what you not want to do. So what's your restrictions, your exclusions, what do you not want to finance? I think through those activities, you will make sure you don't finance the wrong things, doing the wrong business. I think that's very important, but also how do you promote the right business? And I think that is through incentives. We work very closely with DFIs, etc., that brings blended finance to the table, that we can bring certain incentives to our customers that finance the right things and do the right business the right way. And at the end of the day, I think from a bank perspective, you've got different points where you assess that risk. At onboarding, you need to make sure, know your customer, what business are they in? And at that point, you can walk away from business that is maybe unethical or is going to have a negative environmental impact. And if it's a high-risk industry, you can do enhanced due diligence to understand the mitigations around it. When you go into your origination process, we make use of frameworks and tools, your screening tools. The screening tools will assess if it's a low, medium, or high risk, and then trigger certain activities and mitigations. We're better with this at corporate and commercial deals, large deals, because that's where the risk has always been perceived to be the biggest. We need to do a lot of work at the small and medium-sized enterprises where the attention hasn't been to date. I think what banks also need to do is they need to invest in sector specialization skills. We always had them, and if you're serious about the sector, you can't be in the sector for 5 years and then there's a big drought, you get out of it, or there's an event that happens and so on. You need to be in the sector for the long haul. Like people before us said, agriculture is cyclical. We go through ups and downs, we go through droughts, and we go through certain weather events, but we need to see it through it. We can't just pull it away from the farmers. That's one of the biggest frustration for farmers on the ground. So invest in your people, have the right skills that understand farmers and customers and the value chain that's on the ground. When you do these policies and you prepare these risk appetites, make sure that the people that's closest to the reality give input into those. Take your client input and feedback and make sure it's covered in your risk appetite from a risk perspective and an opportunity perspective.
Thanks, Louis. And I'm glad you mentioned the small-scale farmers. We know that 24% of global greenhouse gas emissions come from the agri sector. We also know that a large portion of the agricultural products comes out of the small-scale farmers on the ground. Grace, I mean, you work with some of these small-scale farmers. Are you seeing real commitments made by them in terms of reducing greenhouse gas emissions?
So if you look at small-scale farmers, one of the main things they're interested in is getting food to their tables, being able to pay school fees for their children, meeting their day-to-day needs. So breaking it down for them and helping them understand the impact of climate adaptation is from a what's in it for me perspective. So if they see that adapting climate-smart solutions actually increases their yield, then they would definitely be more interested in seeing that through. If they see that they're getting information that helps them know when to plant, what impact it has, maybe getting better seedlings that have better yields, fertilizer that is actually effective, then that would make them interested and that would give us buy-in. So that's how we're looking at it in terms of reeling in smallholder farmers into this huge objective that we have in Africa. So if we work with SMEs that are actually providing these solutions, then we are seeing that smallholder farmers actually interested in understanding, in joining some of these trainings, in buying these seedlings that actually will provide better yield. So giving an example of coffee, coffee export of organic coffee is actually now selling much better than non-organic. So if they understand that if they adopt farming organic coffee, that will lead to better revenue for them, then they'll definitely be interested in integrating that in their farming. So that's how we are approaching it in terms of what's in it for them, how do we get buy-in, and given smallholder farmers actually make up a huge percentage of the ag sector, then getting this buy-in is very critical for all of us.
It doesn't sound like enough's happening on the ground yet for small-scale farmers. And I mean, next week is the UN conference for climate change starting, and we're 7 years away from having to reach our 2030 goals for net zero. So, Charles, on the flip side, we are seeing major net zero commitments being made by big food and agricultural beverage companies around the world. I mean, every week you see the likes of Coca-Cola, PepsiCo, etc., announcing major commitments. How are those commitments going to start sort of flowing down to the value chain and to farmers on the ground?
Very good question. So it happens one of two ways. Either it's incentivized, so the carrot, or it's regulated, and then it's the stick. I'm a capitalist at heart, so I prefer incentivization, and there's lots of incentives out there. So incentives are when you generally look at it, it's capital that's being deployed to achieve more than just a financial return. So in my world, what most of that is it's funding that is across a funding architecture. So for SME farmers, it would start as an incubator program, which would lead into an accelerator, into venture capital and private equity, and eventually to listing commercial banks, etc. And along that entire food chain of investment, you would deploy targets to achieve net zero, the same way that we implement any sustainability or ESG goal. And the stick, though, is regulations like the Carbon Border Adjustment Mechanism, where you're going to, that's obviously started mostly with heavy industries, but there's a plan to roll it out in the very near future to many other sectors. And effectively, that means if you're an exporter of goods into Europe, then you're going to have to meet certain targets in terms of the emissions that were emitted to produce a good, any goods or services. And that does bring into question a lot of issues around measuring and double counting, but the regulation is definitive. It's already being applied. The first round is already live. And so a number of our clients so we deal with businesses that are global, that are delivering goods into Europe, and they're having to report on this already and be mindful of it in terms of their production processes. And there are certain ways there's a certain amount of protection for smaller businesses and for some sectors. It's not implemented uniformly. I think that the EU is being cognizant that there are certain elements that have to be carefully implemented. But I think that the way that it's going to work is a combination of the two. And ultimately, we need to address this issue at all levels. And I'll say it again, that so I'm in the investment sector. That is what I do. I work with investors predominantly, and I look for ways to deploy capital to achieve these goals. And that is everything from my team on the ground that are doing an environmental and social due diligence to look at ways, not only does this business or opportunity tick the boxes from an ENS regulatory perspective, but what challenges and what opportunities does this business have to, for example, be climate change resilient? What do we have to think about in the development of this business opportunity to make sure that we achieve the net zero targets? And through innovation, you're actually able to develop a far more meaningful business in the long run.
Now, thanks, Charles. As we sort of race to net zero, Louis, I mean, once a farm has done its renewable energy plant or sourced renewable energy from somewhere else, there are other things that are going to have to be done to actually achieve goals to net zero goals. In your position, are you seeing some innovative solutions out there to help farmers?
I think if you look at farmers, we talk about smart agriculture, and we now call it climate smart agriculture. They've been doing many of, specifically the commercial farmers, have been doing these practices for efficiency reasons. But anything around smart energy, smart water, smart equipment, or smart practices has got a climate impact as well, because you bring in efficiencies. If you think of renewable energy, it reduces the carbon footprint. You use the natural crops and sun to give you energy. If you think of equipment, remote sensing, if you think of smart equipment and new technology, tractors and harvesters, etc., they're more efficient. They use less fuel and so on. So all these practices have got a positive climate effect. If you think of regenerative agriculture and agroforestry, if you think of all these initiatives, they're good for the farm, good for the natural. Maybe it's me. Sorry. Maybe it's good for the natural resources, but it also provides a climate benefit. Two things that we're seeing, as the previous speaker spoke about it, is in the tech world, the ag tech world, and the trying not to move now, the tech world and digitization innovation. There's over 300, and somebody asked, is there not too many apps in the market? There's over 300 ag techs and fintechs on the continent, and not one of them has really solved for the whole value chain. So what we've done and what we've seen recently, come forward, thanks. Am I moving too much? Sorry about that. Sorry, is that all right? So what we've done, and many other are playing in this field on the innovation side, is in South Africa, we've partnered with Hello Choice, and we've launched One Farm Share. I think last year Nikki did speak at this Indaba around the initiative, which is CSI as a service. It's got food waste reduction, and if you do food waste reduction, you also reduce the carbon footprint, and it gives corporates the opportunity to invest or donate into this initiative, and they know their funds are going for the right reason. And it's also linking up to women farmers, SME, small-scale farmers, and it also touches on some of the social impacts. If you look at the rest of the continent, some of the stuff that we are testing and developing in Uganda and Kenya, with another partner that we've got, SASA, is to digitize the agri value chain. And the first step is so simple as to create profiles of farmers, digitize those profile farmers, understand where they are located, that you can do traceability, and then you link in all the other stuff like payments, lending, agro-inputs, agronomy services, financial, and education of the farmer. So I think that's going to be important for us to bring efficiencies in the value chain. And at the end of the day, you link the small-scale farmers with the off-takers, and then you can assist the farmers also to give them access to market. So all these type of innovation is interesting. It's about, and previous people said, how do we scale this, that we can also make sure it's sustainable at the end of the day.
Thanks. We've got 15 more minutes, so I'm going to ask you guys to speed up your answers a little bit. But moving over to some of the other pressures in the space or complexities, besides climate risk, there's a tussle between food, forests, and water. We know that the agri-industry uses a lot of water, and it has caused a lot of deforestation. Louis, I'm going to stick with you. In June of this year, the EU published the deforestation regulation, which came into force. How will that impact local farmers in Africa very quickly?
So just in short, if you're not aware of it, I'm also learning every day. This legislation and regulation from the EU is for importers from certain African countries and continents. They have to provide more due diligence of where they're sourcing their commodities and crops from. And it's the usual suspects like coffee, cacao, rubber, wood, cattle, soya, and palm oil. So they're going to get fined if they don't, if they import these commodities from high-risk deforestation countries. So anything after 31 December 2020, if you source your commodities from these regions, you're going to get fined. So you either have to change your formulas, your products. If you're a chocolate manufacturer and you import cacao from Ghana and palm oil, are you going to change your markets, or are you going to pay the fine? How are you going to manage it from an EU perspective? If you flip this around, how's it going to impact our farmers across this continent, where many of these crops and commodities drive those economies? From an Africa perspective, we know that. So they need to do a lot of work around legislation of land use, reforestation programs, expedite that. Somebody said it earlier today also, improve your yields, your productivity on the land that you've already did bush clearing on, collaboration, data tracking. So we will see that the foreign companies will ask our customers to submit certificates around their environment from where they source it. So how do we, it's going to be additional admin, additional cost. Or the farmers and the exporters might find new markets. Yeah. And that's going to not help with deforestation. So there's really good intention, yeah? And I think regulation is a good way to implement certain taxes and help for something. But I think there's a lot of collaboration to happen, and I think over the next year and a half, this needs to be addressed by local governments, community, public sector, and all the stakeholders.
Yeah, we need to stop deforestation, but we also need to reduce the amount of water that the farming operations use. Grace, in terms of embedding ESG principles into operations, what are you seeing on the ground in terms of what the industry may be doing to reduce the amount of water it uses?
So just focusing on SMEs, what we're seeing is a lot of innovation coming through in Africa, and a lot of this is even linked to the youth. So lots of innovation hubs, sandboxes, testing out solutions like climate smart irrigation, but it does require significant investment. So that's, I believe, is one of the things that may be slowing down that impact, where we actually see the effects of this innovation. So I think investments channeled towards this is very important. And I think in a previous panel, we talked about climate adaptation investment. So in terms of channeling investments toward this, probably not just looking at DFIs, I think all financiers have a role to play. And we're looking at this as a long-term solution. So just like Louis said, giving that patience and not pulling out when things are not working out, knowing that probably the return on investment may take longer before these business models are tested out, but knowing that this is actually going to be good for the ag sector. And I know we'll be going into reporting and disclosures soon, and if that catches up with us, with the ag sector, before some of this impact and changes are seen, then it could adversely impact this sector because it would be seen as nature negative. And then that would decrease the investment in agriculture, which is already significantly low for this continent, considering 90% of the GDP in Africa is actually significantly contributed by agriculture.
I mean, besides environmental considerations, social considerations are equally as important. And as a lawyer, we track changes that are happening globally from a supply chain due diligence perspective, human rights due diligence perspective, and it can be quite overwhelming. Charles, I know EY also tracks some of these metrics, changes in law, etc. Can you give us a flavor of some of the recent changes that have happened and why some of these changes are important in the African continent?
Thanks, Aaron. Before we do that, I just wanted to mention one thing that we are doing a lot of work on at the moment, and which speaks to deforestation, reforestation, water security, and that is biodiversity, which is now being addressed through the Task Force for Nature Financial Disclosures. And it's something that's increasingly important, not only to our investment clients, such as private equity, but also our corporate clients across Europe. They're all looking to understand what the impact of their supply chains are on biodiversity. And the agri sector is a focus sector. I haven't met a farmer who's not a conservationist at heart. And I think it's somewhere that the agricultural sector can have a major influence on climate change outcomes. Because it's been proven that biodiversity, protecting biodiversity in an ecosystem leads to effective carbon sequestration. But I'll leave that one and on to social, because social is actually incredibly important, because none of the other stuff that we do, none of the other environmental interventions will be sustainable if we don't address social issues. And so those are issues like fair and equitable wages, good working conditions, fair treatment of labor, gender equality, addressing the gender pay gap, looking at the beneficiaries of those that are employed in the agricultural sector, understanding their needs from a healthcare, education, and from a food security perspective as well. If you want to affect real change, if you want a sustainability program to be truly sustainable, you have to address the social issues. Our clients range from development finance institutions, institutions like MasterCard Foundation that are providing grants and incentives and early stage funding, through to banking organizations and corporations, all trying to understand what are the positives that they can generate, what is the positive impacts that they can generate through a sustainable program on the S, and what risks do they need to guard against. Looks like time is being called.
So we're at 8 minutes, eh? Okay, we've been cut a little. No, that's fine. I have one more question, and then we can maybe open it up for the audience for questions. I mean, mention was made of the TNFD. Grace, are you seeing anything significant in that space from a nature-based solutions perspective?
I think, to be honest, it's not as fast as the regulation is coming. The regulation is already here with us. I think probably we've been given a window to adapt before the disclosures get to Africa. But given a lot of financing is actually from other continents flowing into Africa, then those investors are required to disclose. And given only 16% of climate finance flows went to the agriculture sector in Africa, that was in 2020, and it hasn't significantly increased since. What happens is if investors consider this a more risky investment, which they already do, what we are trying to do is de-risk agriculture. Then if it's considered even more risky, then the finance flows to this sector are going to reduce. So I think what we need to do, and I think we've all discussed various interventions and solutions, is how do we speed this up faster than the regulation is catching up with us. Because as soon as it does, then that's going to impact the flow of financing into the agriculture sector in Africa. And we're going to take all the steps we've made forward over the last few years, then we're going to lose that momentum. So I think this is a critical discussion, what we've discussed today, and if all this can be implemented and we get to that level, then yeah, I think that's our worry. If disclosures need to be made, then it's going to impact us.
Great, thanks panelists. I'm going to open it up to the floor if there are any questions. But yeah, reporting and disclosure is fundamentally important. While we wait for a mic to go over, there's 2 questions already. Yeah, and at least from a reporting perspective, we're seeing the global world ensuring that reporting frameworks are being aligned to help the industry.
Thank you. Thank you very much. Good afternoon, everyone. My name is Mamati Tembe from FMC. Thank you for the discussion. We're talking about a lot of investment to shape the African continent, agricultural sector, primary production and the value chain. This session especially is focusing on how it might be difficult to have increased investment when we don't catch up with regulations and all of these things that are being piled up. Close my eyes, open them again. Africans import basic food. Basic food, we spend a lot of money. Every country says we don't have Forex because we're importing basic food. How do we look at growing and adjusting into local markets? Sometimes it seems like we're forgetting that African people are spending a lot of money. Only these food systems we have are not set up in a way that promote local markets. How do we do that? Because right now, whatever Europe does, we start dancing. Increase the value of our own markets, increase the value of our productivity. Can we rethink? It's probably more of a mindset that now we have a lot of consumers in this continent that will be probably a way of de-risking this dependence. I just wanted to add that comment, maybe just to help us to think outside of the box, because right now we think as if we don't have a way out, we're so channeled. Thank you.
Thanks. I mean, I think if I can summarize the question, we're looking at ESG from an investment perspective in terms of getting global north investment into Africa. But should we not be looking on our own continent to actually drive local investment to deal with food security issues, etc.? I mean, opening it up to the panel, is that something that at least the banks and financial institutions are looking at?
Yeah, perhaps I can start. I think financial institutions are acutely aware. As part of one of our projects that we did recently, it included a study on how to develop the agri industry in the East African region. It involved a few countries, how to grow SME and sub-commercial farmers into commercial farmers and create a commercial industry, because the research that this was based on was that commercial farming industry is going to lead to food security. Obviously not overnight, but that's the thesis. And in order to establish this, it requires funding on all levels. It requires innovation. It requires regulation. It requires government providing infrastructure. The sector needs logistics infrastructure and agri infrastructure to support it. You need to have farming equipment that's being imported into countries where there hasn't been a lot of farming equipment to add the agri tech that's required. So you're building an industry from the ground up, and it's going to take time. And if you want to build something, you want to attract the right investors with the right mix of capital. So the ladies on the panel before us were talking about blended finance that involves concessionary and commercial investment. But like I said earlier, there's a whole food chain of investors that are going to feed into this process to develop different parts of the industry. I don't know if one of my other panelists wants to have a word before I take up all the airtime.
Thank you.
You're cutting us off, Chris?
No. We just need you to wrap up,
okay.
And then we are done.
All right.
Thank you. I appreciate it very much.
Good. Look, I don't know if we have a last. I thought we were on time because we had 45 minutes. But I don't know, panelists, is there any parting shots before we end up today?
let me address it, and then I'll give my mic to Louis. Jeez. Sorry, long day. So to attract that right mix of financing, you have to understand that investors are looking at risk on all levels. ESG and sustainability are designed to help to inform investors so that they can understand the risks involved at every level of the opportunity. The way that I've been deploying capital is to use ESG and sustainability as a tool to attract the right mix of funding and to find investors that are going to stay through it, through the course, for the long haul. And that's what we need to address the burning issues of food security, to put food on the table, to the big challenges that are, not that food security is not a big challenge, the other big challenges like climate change. So sustainability is a tool that we can use to help to unlock that capital.
Agreed. Louis.
Thank you so much. My parting message is to everybody in the room to not implement the same standards for corporate and commercial ESG requirements for SMEs and for small-scale farmers. It's going to bring in complexity, cost, and it's going to sort of halt the whole process. So I do think we all need to be flexible, and we need to think about how do we do this more fit for purpose from an ESG perspective. Thanks.
Thanks. And Grace?
Yeah, I think Louis took the words right off my mouth. So not to repeat, and just to say that embedding ESG into business operations was a good to have earlier. I think we're headed to it being a must-have. So being ahead of the game, understanding what needs to be done, and actually implementing, that would actually get you ahead of accessing the kind of financing that your business might be interested in.
Couldn't agree more. Thanks, everyone. Thanks for panelists.
Again, appreciate from my side, I do appreciate that you felt you were cut, but we are